What's good, everybody? Mokama Sunday service. Today, we are going to be talking about the best stocks to buy or invest in right now. And the major question when we talk about that is what are the best prices to buy at? I thought that this was extremely important, as if you've watched my stuff, I never believe at buying at all time highs. And we saw what could potentially be called as like a correction. Not quite a correction. A correction is a 10% drop in the stock market. It might even be 20%. There's varying definitions, right? But we saw a significant drop in the stock market. And that would have been the time, or during those times when you are seeing pullbacks in the market, if you believe in a particular stock, you've been tracking something, if something had earnings that you thought were really good, and it was at an all-time high and then started to pull back, that's when you should start thinking about buying that stock or investing in it or taking a leap on it if you trade options. Is when something, a good asset, is on discount, that's when you should be thinking about buying. But when you don't have your prices ready and something drops, then you're just buying the dip. And that can be dangerous, what they say, catching a falling knife. However, if you have previously looked at the fundamentals of that particular stock, the technical action in that stock, where you are confident in your particular price, even if you have a stop below that somewhere, or if it's a long term hold, but where you know that this is a significant discount on a good asset, that's where you should be trying to buy any asset, stocks, houses, whatever it is. When something that's a good asset actually becomes discounted, that's the best time to buy or invest in anything. So, number one, we're talking about NVIDIA, right? Nvidia is still a little high right now. It came down. A lot of us in the room, we own Nvidia, but my price for Nvidia is at around 102 to 97. We talked about Nvidia pre-earnings last week. I'm not going to go deep into the earnings, but when we're talking about Nvidia specifically, I am going to, I think I pulled up, hold on. I just Googled NVIDIA earnings. In terms of its expectations, the expected revenue was 38.14 billion. It reported 39.33 billion. And the CEO Jensen Huang is saying that Blackwell chips are like flying off the shelves. They can't keep them in stock still, right? Even post DeepSeek stuff. That's why I'm still bullish on Nvidia. And in terms of the expected revenue was greater. It was a 3.13% surprise, and the earnings per share was greater than the 0.85 or 85 cents. It's 89 cents. So Nvidia beat its expectations. If you look at its earnings, right, data center revenue is still growing. And it's growing more even each quarter, because it was what, 26 billion to 30 billion, and now it added on another 5 billion. Gaming revenue is down a little bit, but no one really cares about that, to be honest, right? Professional visualization, everything else doesn't really matter. What matters is its data center revenue. And if you watch my episode last week, that is primarily compiled of their compute. They segment that into two sections: their compute, which are the chips themselves, the H100s that they produce, as well as the new Blackwell chips primarily, and then the data center revenue, networking, stuff like that, which is way less, uh, probably what, 5-10% of this data center revenue, maybe even less than that. I would have to look at the specific numbers, right? So Nvidia is still growing, right? Look at its bottom line numbers each quarter, right? If you go look at the last, what, these are last 8 quarters, look at that consistent growth. That's ridiculous, right? So it doesn't seem like the demand is cooling off for their chips, at least from this data snapshot that we have, which is why I think Nvidia is a great stock to invest in at the right price, right? We bought in I know Ange, I think you were around $100. I was around 106. If
Yeah, I'm at
Nvidia,
like 106 too.
oh, okay, so yeah, we're around the same then in terms of I averaged in. I think I bought at two different prices, one a little bit higher, and one a little bit lower, and I averaged at around my average share price right now is around 106. So if this thing gets back down to 102, uh, specifically that's where my alert set, but I want it. What did I say? Between 102 and 97. I think that's a great price to get an asset like Nvidia when I'm just showing you what the revenue numbers look like. Right. As of right now, with all the data that we have, it doesn't look like the spend on the best chips in the world to get the fastest results, it doesn't look like the demand is going down. So if the demand doesn't look like it's going down, look at the chart. The chart looks amazing. What you don't want to do is buy at 153.13 at an all-time high. Every asset, no matter how great it is going to pull back at some time, and you need to be waiting. So I'm waiting for Nvidia to get down to 102. If it gets 10 cents away from there, that's when I'm going to be thinking about either taking some leaps on Nvidia and or buying some more shares, right? AVGO, another semiconductor company, except mostly, and they're not Nvidia direct competitors, but they are creating a lot of these semiconductors that act as switches and routers for these chips, as well as a vast other array of semiconductor products, etc. Right? My price for AVGO, which is Broadcom, I don't know why it's called AVGO, but that's their ticker, is 162. The reason why it's 162, if you go look at their 5 year chart, I draw my Fibonacci retracements on it, and around 162 is when it's at approximately what 39% off, right? 38% off its all-time high. And I'm looking at the technicals. If you look at these bars, and I'm on a weekly chart, I screenshotted a weekly chart. AVGO right now is at $200 approximately, 199.43. Um, but I like that there is a lot of support and resistance right there. And these candles, they seem to be hovering around this white line right there, and this is a weekly uh, support, not just daily support. And I see about what 5 or 6 candles where it served as support and resistance. And if it needs to pull back dramatically, I think, for this to be good value. And so right now we're on a decent pullback in AVGO, but if I want this really long term, my new rule that I'm really instituting for myself before I buy any asset from a leap standpoint, from a long term investing standpoint, it needs to be at least 40% off its all time high. That's my new rule. I would love it if it's even more discounted, like 50%, 70% or 60%, right? 75%. That's even better, but it needs to at least be 40% discounted off all time high for me to hop into anything in my long term account, right? Not my swing trading account, but specifically my long term account. And then it may drop even a little bit more, but I feel more comfortable holding on to an asset that I want to hold on for at least 5 years or on a leap for a year. That if I buy something that's at least 40% discounted, it has a higher probability of being a good investment, especially if I looked at the fundamentals of the stock, looking at the earnings report, looking at how much cash it has on hand, looking at its business model. And if all of those things check out too, then I'm going to feel more comfortable holding something for a longer period of time, like AVGO. Once again, look at its all-time high at $251.88. Your stomach would be turning right now if you invested in AVGO at its all-time high, right? So always wait for a pullback, even on the best names, unless that's part of like your swing trading strategy. Um, but that's completely different than what we're talking about right now, which is like something to put in your retirement account or whatnot, right? Really good stocks, and once you start seeing this pattern, look at how the chart looks. It goes from the bottom left up to the top right. That's what you want to see in something in your long-term investing account that is likely going to be a better buy, a better bet than something that looks more choppy, right? This looks like great results over the last 5 years, right? Next one, Microsoft. My price for Microsoft is $340 to $300. I know that's a large range, but I'll show you why, right? So, Microsoft right now is actually pretty discounted if like you think it's not going to go below what 396.11. But once again, look at the chart. Bottom left up to the right. Wasn't as smooth as AVGO and Nvidia, but still, look at the last 5 years. If you would have bought Microsoft at $132 approximately, you would be happy right now with your investment. And Microsoft, so if we're talking about what does Microsoft do, its operating system is what it was primarily known for in terms of its decades of history. However, right now their major product, their major portion of revenue is coming from cloud computing, Microsoft Azure, right? And it's like what AWS pretty much discovered that they can host other people's apps and services directly in the cloud and then charge them a pretty penny for that. Microsoft realized that it had a lot of institutional customers already that were using its software and services and started selling them all of these services, but inside of the cloud, and it's been going amazingly well for them, which is why they had this big recovery and Microsoft is Microsoft. And additionally, they have a huge investment and own a significant portion of ChatGPT. So when it comes to like the future, Microsoft is sitting in a very comfortable position by owning a substantial piece of the largest, most commercially aware LLM right now, which is ChatGPT, which was first to market and which people use more than the Claudes and the Geminis and the Perplexities and everything else that's out there right now, right? So that's why Microsoft looks really good. Once again, my rule is I do not invest in anything or take leaps on anything that aren't at least approximately at this fib level right here, which is approximately 40% off, which is where I got my Microsoft number, right? $340. I also like this 200 week moving average right there that's kind of coinciding with the fib level. Right, and you see right here previously in the past when it bounced off that was the low point for it. That's why I really like this 340 level right there, right? And then 300 would be like the Godfather price. If it gets to be 50% off on Microsoft, buy as much as you can. At least that's what I'm going to be doing. But I really like that 340 level, given that this 200 week average showed that it bounced off of that a couple of times, and that's probably going to serve as some good support, as well as this fib level right here. So yeah, 340 is where I would potentially start buying leaps on Microsoft. Meta is the next one, right? Love Meta. Right now, my price for Meta is $500. Will it ever come back down there? Who knows, right? Meta's been going to the moon. Once again, let's go back to Microsoft. We saw how that chart looked compared to Meta's. Meta had a little bit of a chasm, but look at that price. If you would have bought 5 years ago and held on, you would have been doing amazingly well once again, right? This is when they had their Apple iOS hiccup and uh, uh, that whole era of Meta where them and Apple were essentially at odds with one another, where Apple was taking privacy more seriously, which hurt Meta's algorithm and its ads algorithm, which is why I think this is when that deep chasm hit. And Meta figured it out, started really distributing its pixel into everybody's website, figured out how to target people with its AI algorithm outside of needing to really be inside your phone. And from there, man, they took off. Mark Zuckerberg started taking jujitsu, and bam, took off. Right. So everybody go sign up for jujitsu classes because apparently That'll make you almost a trillionaire. Um, so Meta looks really good right now. I know how much I spend a month on Meta, which is why I'm very confident in the stock. I've been looking at this thing for a year or two now, and the thing has never pulled back 40%. So when it does, I will be there waiting. Right now, that number for me is around $500. The fib level is around 491, so like 490 to $500. When I give you a specific price, like really, I'm talking about a range where you might want to average in at that particular range, but 500 is really like where my trigger would be to kind of start hopping in. And I just like all of these weekly candles here that are hovering around that 500 range, which means it's going to probably serve as really good support to potentially buy in, because it was old resistance and old support. And just looking at how many candles are around that area, and just looking at previous drops, this is also something that I like to do, right? If you look at this drop from here to there, it kind of went down one level, two level, three levels. So that's kind of where I foresee like what Meta might do, right? It typically isn't going to pull back more than one or two levels if you're looking at these fib levels in its history over the last 5 years. So the best price I think on Meta would be right here at $414.51, right? 420 right there, because it would come down one level, two levels, three levels, which is probably the biggest percentage drop it's had over the last 5 years. So if you really wanted to be safe, then wait till Meta pulls back to that 50% level. Will it ever do that? I don't know. But I really like this 500 level as a place where I may not miss the meta pullback, and I would be willing to stick it out in this particular investment all the way down to $400, because if I can get Meta at 40% off its all-time high, I don't think Meta ad prices are going down anytime soon. They're always trying to innovate. I don't know if you've seen their glasses, especially their prototype glasses, that are supposed to be essentially the Vision Pro, but without the big headset. And the reason why Meta believes that that's extremely necessary, we've talked about this in their prior earnings releases, is because of this particular drop in the stock price right there was the result of them not having their own hardware, right? They want these glasses to replace your smartphone one day. Imagine if you could have a smartphone in your glasses and you don't even need to carry around something in your pocket, but something that's on your face, especially if they're shades or something like that, that you wear every day consistently. Imagine if your phone was your glasses, and then Meta would control the hardware, which means that they would actually keep all of the data that the Android platform and that the Apple platform right now have. And so they wouldn't be so reliant on Apple's and Google's platforms to make money. And so that's why they're trying extremely hard to try and find some new hardware and trying to find the next new smartphone or whatever thing that everyone carries around with them every single day, and that connects directly to Meta. So it would make their ad algorithm better and potentially give them another vertical like the iPhone did for Apple, right? So that's Meta. Those are my prices right there. And why? Next one, Eli Lilly. Oh my God, this one pisses me off because my price for Eli Lilly has been 725. It came down to 725.02 and took off. Right, so I almost hit it by 2 cents, but it didn't catch my alert. This is the thing that I really wanted to buy because I just love the company, love the management. Um, all of the drugs that they're working on, the pharmaceuticals, the weight loss stuff, right? And so Eli Lilly is just one of the best like pharmaceutical medical companies out there. My price for them is at 725. And look, these are the two candles right here where it came 2 cents away from my price. If I and so now you see I have an alert at 725.10, a little bit higher, because if I would have did that, I potentially could have been an Eli Lilly, and it literally hasn't looked back from there. It bounced off that particular day, This is a weekly candle, but it was a day that I saw. I think I looked at it 2 days after because my alert didn't trigger, and it literally took off and never came back. That would have been a really good potential leap trade for me, or shares, because Eli Lilly. It breaks my rule a little bit because it didn't pull back 40%, but like Eli Lilly is just one that I just saw. Look at all of this support right here at around 725 on a weekly chart. That previous support, all of these candles, all of these candles, all of these candles. And the whole healthcare industry was pretty much down around this time. So I felt that people were going to rotate into the sector, which is what happened. And yeah, missed it by 2 cents. Right. So didn't let FOMO get me, but this is one that I'm pissed off that I didn't grab. So if Eli Lilly comes back to 725, it's something I'm thinking about buying leaps on. Once again, in terms of my 40% rule, it would be a better trade at around $646, $650. That would be an even better place to grab Lilly. But as you see, Lilly hasn't really dropped more than, let's say, one of these zones in the past. And that's why I would probably take a bigger gamble on Lilly and not wait for such a significant pullback to around 40% off the all-time high, but maybe 30% would be a better place, just looking at where all this support is at that 725 level. UNH, we talked about this one. I brought this up because Isaac, we talked about this one the other day. My price for UNH is 450. It was recently there. The reason why UNH dropped recently, this big red candle, is because the DOJ said that it's investigating them related to their prices or something. Don't quote me on that. I'm not exactly sure. But I do recall seeing some news that caused this drop where the Trump's DOJ, which everyone thought was going to be softer on a lot of these massive companies than the Biden administration, reported that they were potentially going to be investigating UNH regarding something, right? I thought it was related to its prices. I could be wrong, right? Or how its billing practices, something of that nature. But this is one of the leading companies in the sector in terms of like healthcare, right, and health insurance, and it's profitable. And if you look at the last 5 years, this would have been a really good investment if you would have bought in around $187, right, all the way up to where it is now, 474 at its all-time high was at 630. And it's one of the top in the sector. All of these companies I've been giving you are like top one or two in their particular sector or subsector, right? So this is still a decent company other than the investigation. So it's like, even if it does lose some money due to that investigation or something it might have to do in the future, is it significantly discounted now? And has the stock discounted that news? I think it's close to it, right? And if you look at over the last 5 years, look at that 450 level. Look at all of the times that weekly chart served as support right there and has been a bounce. So, and then it bounced off of there even when it dropped and came there again. So if it comes back down to 450, I think that's a good place to potentially buy UNH and or a leap on UNH. Even if you look at the RSI, the relative strength indicator, it's not the only indicator that I use, but you want to see this like and see how exhausted something is. Look at when it hit that 450 level here. It was exhausted all the way down here below 30, and then it popped back up from there. Same thing in a lot of these other places where it hit 450. They were kind of like levels of exhaustion. So I really like that 450 level. Not that it couldn't come down to around $400, which would be an even better place to buy it. But in terms of 450, where if you're holding this long term, I don't think that would be a bad buy if you intend on holding this for 5 years. Just looking at where the chart is, and you're essentially you would be buying. You would ideally, in 5 years, you would want the chart to look like this, where your buy point is around this 187. You're hoping that that 450, when this chart, if it were to slide to the right over 5 years, would be the lowest point of that chart's history over the next 5 years is when you bought it, ideally. That's why I always wait for pullbacks and why I'm not buying at all-time highs at like $630 and 73 cents. If you bought it there, your stomach is hurting right now. All right. LVMHF, another one. Um, $600. This one is potentially close, not extremely close, but this is an expensive stock. It's $714 a share. I like luxury brands. And so when I say LVMHF, I'm not just talking about Louis Vuitton. That's Moet, Hennessy, and 72 approximately other luxury brands. LVMHF isn't just a Louis Vuitton store. It owns damn near most of the luxury brands that you can think of, with the exception of like Hermes, Gucci. Those are the top two competitors. Kering, which owns Gucci, and then Hermes, which I think might still be like privately family owned, right? Other than like those two major brands and a couple of other sub brands underneath those, like LVMHF owns all of them. Like even Fenty, Savage Fenty, right? They partner with Rihanna to start that. So LVMHF isn't just Louis Vuitton; it's almost all of the luxury brands that you can think of, with the exceptions of the ones owned by Kering and Hermes, right? So I really like LVMHF, and what shocked me was during the economic downturn is that it did pretty well. And so I don't know what it is about people and buying luxury, but even if, when people are broke, they still tend to buy luxury items. I'm sure from your own family members and whatnot, you could probably attest to that. Somehow people can't pay their rent, but they're still in the Gucci sneakers and the Gucci loafers, and always got the best clothing and best brands on, but complain about they can't buy books for their kids and stuff like that. So, like, for some reason, people will prioritize these luxury items and goods over food, which is crazy to me, but it's what happens. So, my price here, right? So its all time high was at 1,003 bucks and 50 cents. It's already significantly discounted, but just looking at the price action, and LVMH tends to have some wider swings, right? If you look at here, this drop, it came down two fib levels, three fib levels. So that's kind of what I'm looking at. Even here from the top, one, two, three fib levels would be around 650. That would also 650 to 655 would be a good entry price. But I just like, just number one, because this isn't a tech company. It sells bags and goods and things of that nature that aren't even sometimes premium. They're just luxury. People buy it because they want the brand across their chest. It says something about them to other people. They care about what other people say. And just looking at all the support here at 600 over the last 5 years is where it's really bounced. Even at that 570 number would be even better buy, but I'm just looking at the most recent price action, and this week, these three candles, it bounced at 600. So that's my entry price on LVMH would be 600 bucks. A better price would be around 570. Walmart, another stock that I like, especially in downturns. Its last earnings reporting wasn't that great, but like, do I think less people are gonna go to Walmart over the next 5 years? I was talking to Isaac about this before we started. Is if you were in a coma for the next 5 years, or if you were in a spaceship and went to the moon for the next 5 or 10 years and couldn't have any contact with Earth, and you came back down, what companies do you still think will be around and will still be thriving? I think Walmart is one of those companies. I don't think Walmart's going anywhere anytime soon. It's Amazon is a low price leader, but for online. But that might, unless Amazon figures out a way to get everything to you within an hour, right? Some things it can get to you, like some paper, and depending on where you are and what city you're in. But if you need something today, right now, within the next 10 minutes, 20 minutes, you can probably go to a Walmart and find it and get it, right? So I don't think that brick and mortar is going to fully go away for the people who need an item right now, today, or can't wait 2 days or 5 days for something to ship. And so, not only that, Walmart's e-commerce platform is getting better too, and it's starting not to compete with Amazon, but it's starting to get people to convert to their e-commerce site as well. So I think Walmart's strongly positioned to do well in the future. My price for it is $80, right? And why is it $80? Because that's where it would be approximately 40% off its all-time high. If you look at Walmart too, Walmart doesn't really go down that much. It right here though, it did like go sideways for a couple of years, right? And I think this is when they were trying to find their footing with e-commerce and where they fit in with Amazon and especially during COVID, right? So it was finding its footing and going sideways, right? And then it's been taking off ever since. But what I like, there's a little bit of support here. I want a good asset, at least 40% off. And around that $80 mark, that's when it's approximately 40% off. And then I see a little bit of support right here on a weekly chart where it kind of bounced off that number a few times, right? Around there, $78 to $80, right? I think is a good place to potentially buy Walmart. This is just a company that I don't foresee getting any smaller uh, anytime soon, especially if we go into a recession. More people are going to be shopping at Walmart because they have the best prices, uh, the cheapest prices, low cost leaders. Visa, is this one of my last ones? This might be my last one. I was trying to do 10. Visa, $280. Visa, credit card company. Once again, look at its chart. Go 5 years ago, if you would have bought at this dip, and I was buying dips at $134, you would have 3x your money approximately, right? But look at Visa. Visa's at an all-time high. So Visa's at $364. I can't buy Visa at an all-time high. And credit card debt is at an all-time high right now. This is another great company that I've been waiting for a pullback on that hasn't pulled back. So once again, I want Visa at around 40% off at $280. This is one where you're like, man, maybe if it's 20% off, I think about buying. Maybe I would swing it here. But in terms of a long-term buy, just to be safe, look at all of this support and resistance revolving around that 280 mark. In terms of candles coming up and either popping off of it or coming down, right? Right there. Same thing here. That's where it took off last time, was around $280. So that's my price on Visa, right? And I'm just doing from a technical standpoint. All of these stocks, I think, are fundamentally sound. They are reporting growth and earnings, with the exception, like I said, Walmart, like, had a hiccup this last quarter. But over the last year, all of these stocks have reported substantial growth in earnings, profits, and they've been going up. And their chart has reflected that. So, from a fundamental standpoint, I looked at their earnings and I like them from that standpoint. But that's only half of the question. The second question, or actually that's only the first question. The second question is, okay, now that I figured out this is a good company, what's a good price to buy it at? And at 364, I don't think that that's the case. I might be wrong, but from a historical standpoint, like, I like to buy good assets at discounted prices. And so I have to wait for something like this that's extremely strong, one of the strongest stocks in the market right now. I need to wait for this thing to come down and air itself out a little bit before I put it in my retirement account. Because what I don't want to do is, I don't want to be this guy that buys in at 364 and then this happens, right? 105 now to $98. LVMH 1003 now to $714. United Health 630 down to $470, right? And so these are the people that are saying, I hate the stock market. The stock market is a scam. No, you bought a good company. You just bought it at the wrong price. And chances are, even if you hold this thing for 5 years and you buy it at the wrong price, chances are you're still going to be good if you buy a fundamentally sound stock. But the best thing for you to have done would be to buy a good stock at a discounted price and then hold it for a long time. Oh, here's the last one, I think. Netflix. My price for Netflix, $600. Everyone knows what Netflix does. Its one primary vertical is subscription for TV platform, movie platform, right? And now it also has an ad tier for the people that can't afford the subscription platform, right? So Netflix, same thing. Look at the far left. It did have this massive dip right here post COVID, right? Once again, so this is why Netflix, my price for Netflix is around 600 bucks or around 50% off, because I've seen historically it's had a little bit more volatility than some of the other stocks that we've been talking about. Right here, Netflix came down one level, one fib retracement, two fib retracements, three and four, right? So that's the type of volatility that Netflix can have. So for that, I'm going to wait for a more significant pullback to 50% off the all-time high, because it's had a history of having a substantial pullback. So I kind of want to wait for that until that comes down to like 600 bucks, if it ever comes back down there, which it may not, right? But for me, for my long-term portfolio, I would want to wait for Netflix to come back down to 600, because it's shown some volatility, especially like I think this is when it was missing its subscriber numbers, when it was reporting negative subscriber growth. This is how much Netflix could come down. So yeah, I would wait a little bit more to buy Netflix at that 600 level. Around that 500 level, but would be even better. But 600, I think, is a safer bet to buy Netflix or enter a leap on Netflix versus at 700 or 800 at one of these other levels up here, right? That would be more of a swing trading level for me. All right, that is it. I think we went through 10 of the best stocks in the market that I'm looking at. And I notice that when I say buy now, I mean buy if there's a significant pullback like what we've been seeing. If we see the market correct even further and come down, um, that's when you should really be thinking about buying. When everyone else is fearful, that's when you should be greedy. When everybody else is greedy, that's when you should be fearful. If you're seeing everything at an all-time high, that's when you should be scared. If you're seeing these pullbacks in stocks, you should be putting your shopping list together to figure out what makes sense for you and your particular account, your IRA, what you already have in there. What's currently in my IRA is a lot of tech. I have a lot of Nvidia shares. I have a few AMD leaps right now. I have some Costco shares, and that's been doing really well. That's one that I didn't put on the list. Um, so these 10 aren't the only things out there, but some Costco shares have been doing really well for me right now. What else do I own? Some Shopify leaps have been doing really good. I have some ETFs. I got some SPY. I got some QQQ. I got some XBI, which is biotech in my long-term portfolio. So just some things that I have. Um, I don't like Tesla. Tesla has pulled back. I'm actually thinking about shorting Tesla next week. It came back down to that 300 level that it hadn't been popping up on. So it would have been a really good swing trade from Elon's presidential rise. But now people are starting to boycott Elon and Tesla and starting to, I think people are buying less, specifically of that product because of who he is. So I don't like Tesla long term for that reason, right? Unless, like I said, I need to see what they do with their bots, their humanoids, and if Elon actually wants to keep that tech inside of the company instead of starting a new Starlink or Neuralink or something like that. Before I would be like really bullish on Tesla. But from a car standpoint, their car sales are down. People are buying less of the cars. So if it's just a car company, I don't like it for that reason, long term. But once again, I've been saying that for a long time, and people have swing traded the damn thing and made a ton of money off of it. So from a swing trade standpoint, I could totally be wrong. All right. So next week, what am I looking at from a weekly stock pick standpoint? Hold on. For March 3rd, once again, my disclaimer, which is in the video description. This is not investment advice. This is primarily what I am doing. Investing is risky. This is for informational purposes only. Trading is risky. You could lose money. So you should direct your trades and investments to your financial professionals if you have them. And ideally, you get to a point to where you can do your own research and you can make these decisions without me. And I'm just another talking head, but I'm just pretty much showing you what I am doing in the market every single week, right? So how do I build my swing trade watch list? What we talked about in the beginning of this video was investing. This is my swing trading. My swing trading has actually, knock on wood, been doing pretty well this year. And I think it's because I switched up my rules a little bit, right? I have been taking less trades and I've only been taking the best trending sectors in my trades. And for some reason, that's been working well for me. So, like some of the names that aren't trending as well, I just won't look at them until they start trending. And that's been working a lot better for me rather than taking more trades. I'm trying to take like maybe one a week. If I'm in a trade, I won't take another one and just focus on that one trade. At least until I get out of that trade, I won't put another one on. And I've been trying to take names that I can trade with a spread rather than just buying options. And that has been working better for me too because I've been able to stay in trades for longer because time decay has been on my side. And so I'll take slightly more size if for something that I can trade with a spread, and then I'll take less size with something that I'm just buying calls or puts for. So just for an example, like if my spread budget would be $1,400, but if I'm just buying calls or puts, then I might only put $1,000 on that trade instead, because I know time decay is against me, and in the cases where time decay is on my side, I'm more likely to put more money on that trade, right? And so that's been working for me at the beginning of the year. I think I've taken 4 swing trades, not leaps, because I put those in my long-term portfolio. But my swing trades, I think I'm 3 out of 4, or 4 out of 5 this year. So so far, so good. How do I determine what my targets are for the week? Well, I go to koifin.com, which is a free app, and I go look at the US sectors. Sometimes I also go look at the commodities, but I only trade like 1 or 2 commodities, which is usually gold and I've done natural gas here and there and crude. I don't like those as much as gold. I'll usually only primarily I'll trade gold. And so I'll put that on here through GDX, which isn't the commodity, it's the gold miners, but I want to go see what's the strongest in the market, right? What's been trending? If tech is down, is safety up? And I know what safety is, and so I've kind of been there in the market. Like the last few trades I've taken have been on XLP and healthcare, which hasn't been trending that much, but there are some individual names in healthcare that have been really strong, specifically Johnson and Johnson, and XLP has been pretty strong, right? So gold, same thing, pretty much the last few weeks. It's been the safety stuff. Everyone's scared right now, so gold does well when everyone's scared. Consumer staples, Walmart, Costco, Procter and Gamble, uh, Coca-Cola, Pepsi, Colgate, Philip Morris. Consumer staples usually do pretty well when tech is down or the market is down in general. People are fleeing to safety. Um, the reason why we don't have big crashes like we've had in the 1930s, why those don't typically happen anymore, is because all of these big hedge funds and these big pension plans and funds, they have a mandate to stay invested in the market. So back in the 1930s, when we had the big crash, everyone could go to cash, right? So I could pull out all of my money and then try to go to cash until the market's better. Now, if you are investing for a big pension fund or whatnot, through these massive employee plans and things of that nature, you have a mandate to stay invested in the market. So while you might be selling tech, you'll probably be buying bonds or buying consumer staples or gold or Bitcoin, whatever it is, right? So you're not going to see these massive liquidity pools like we saw back in the 1930s because the market has now been rigged to stay up, right? Where people have to stay invested and can't just go to cash. So they're going to rotate mostly into something else. That, like I said, it could be bonds, which isn't stocks, right? But there are ways to trade bonds through like the TLT, which is the bond ETF, right? So you will find pockets potentially of strength even when things are going down because of this mandate that a lot of these hedge funds who are representing these massive conglomerates, massive employee unions and things of that nature, they need to keep the money in the market somewhere, right? So what I'm doing every week is figuring out where the hell is where is the money going, and where is the money coming out of, right? If I see the money coming out of something, then I want to short it. If I see the money going into something, then I want to take it going long on a pullback, right? So where am I looking next week? Let's go look at gold, XLP, and I've really been taking just the two strongest names that's been working this year for me. And then I'm in a current healthcare one, do Johnson and Johnson, just because Johnson and Johnson was really strong, and healthcare tends to be a safety sector. When people are scared, they tend to go into healthcare. Utilities is one, XLP. And so I kind of made a bet that healthcare is going to catch up with these other safety sectors in the utilities, the consumer staples, and gold itself, which is why I took the Johnson and Johnson trade, and I'm already scaled out of half of my position, and that's already going to be a winner for me. So I was pretty happy about that. Um, but let's go directly into the chart. Let's look at XLP. Right. If you look at XLP, look at that trend from this little trench right here. It looks pretty strong since what? Mid-January. XLP has been looking
We
really
see you
strong.
right now.
Hello? Oh, my bad. Hold on. You know what it is? I didn't share it on my screen. Bam. Can you see it now?
Yep.
All right. So look at XLP, this little trench right here. That was mid-January. Then we get higher highs, higher highs, higher highs, higher highs. This sector is trending. So now, right now, I'm looking for things inside this sector. I have a flexible grid that tells me that's like a sector flexible grid. And dang it, what did I do? There it is. That's going to show me the entire sector, right? And also, what I'm looking at is the entire sector kind of trending. Walmart, not so much, but Costco, like I told you, has been doing pretty well. PG's been doing pretty well. Coke is probably top on my list. I think I said this last week. It didn't have a significant pullback, but Coca-Cola looks really good. We looked at Philip Morris. They just didn't have any liquidity and the options. But if you're buying shares or swinging shares, Philip Morris looks good. Target looks terrible. Don't buy Target. Look at that's terrible. Especially because it's going the opposite direction of the entire sector. So like that's something too. Like I like congruence. I want to be trading with the tide. So Target looks absolutely terrible. Walmart looks okay, right? Even it looks like it's sideways now. It went down, but now it's sideways. Target is below these moving averages, so it's trending down. And what's worse is that it's trending down when the entire consumer staples sector is going up. So this is the worst in breed. I wouldn't touch this thing with a 10-foot pole right now, specifically for a swing trade. But look at these other names. So XLP looks good. I really like Coca-Cola, looks the strongest. So I would really be looking for a swing on Coca-Cola or XLP. I had a swing on XLP last week that I made some money on. And but Coca-Cola is top in brand right now, or the top name. Pepsi is not as good as Coca-Cola, but so really next week this is on my list, and I already have an alert set. I'll probably reset this on Monday. But Coca-Cola looks really good. XLP itself looks really good, right? Looking at the chart, let's look at gold itself. Gold is coming down, but it's still trending though, right? Because it's higher highs. If it comes below 28, like I really like it. Like I've still said 2800, I really like it. But even gold, I still might think about getting into gold. The trend isn't as strong as it was, and I think it was kind of overcrowded. But if we start seeing some more weakness in tech, I think people are going to flee to gold because it's considered the safety name. So I still might look at gold. Let me actually switch my chart, see what it looks like from my trend standpoint. Yeah, it's still trending. It is still trending. I might still look at gold. I don't like that it came down a little bit, but gold is still trending. So um, on a 1 hour chart it's bearish, but on a daily chart it's still trending. So I might wait for a more significant pullback on it, but I still do like gold to a certain extent. I like XLP better. And let's look at healthcare. And this is not one of the top two trending sectors, but it looks like it's starting to trend. I like how all the names look. It is a safety. I wouldn't swing UNH, but potentially investing in it maybe. AbbVie looks good too, and usually has some liquidity on the Abbott Labs. Pfizer, no. Amgen, maybe. Um, Where's J and J? J and J is strong, which is why I'm currently in a trade in J and J right now. And like I said, I scaled out half profitable already for what was it, like a 25-30% target. So I liked it because so I don't think XLV is as strong. So I didn't take a trade at my class, my options class. Something they took a trade on this. They were profitable. I didn't take this trade because I thought J and J was stronger, and that one was profitable for me. So we both were right. They just took and XOV is a conglomeration of all of these names, so I would say it's safer in terms of taking a sector. But I just like that all of these green candles on J and J, and it was breaking highs consistently. I thought it was stronger, so I took it on a pullback on this candle right here and scaled out about right there, and I still have some of my position remaining. But if text continues to break down, I feel that healthcare is going to be where they're going to rotate into. So yeah, that's what I'm looking at next week. Lilly would be great if you're doing shares, but it's really expensive because it's $920, so the options are really expensive. AbbVie looks really good next week, and so does ABT. And if we go look at AbbVie's options, they usually have some liquidity. Yep, they have some liquidity on the call side. Probably can't do spreads on it. Let's see if they have. No liquidity for me to do a spread. So I would probably take a smaller budget and look at the spread here though. Look, you would have to look at this when the market's open to see if the spread uh, uh, lessens, because this is too wide for me to consider buying these options. But let's look at ABT because I've traded these names before. ABT is better from a spread standpoint, but look at it on Monday when the market's open. These might the difference between the bid and the ask might lessen, which would give me an excuse to get into AbbVie or Abbott Labs potentially next week. But because I'm already in the sector, me personally, I'm probably not going to take another healthcare trade because I am already in one. That's pretty much where I'm looking next week. What else? Let's see. Is there any other sector that's potentially XLU maybe? No. Oh, from a short standpoint, that's why I was saying Tesla. I might look into shorting Tesla next week because XLY is the worst sector in the market, and the top two names in XLY are Amazon and Tesla, right? So I'm recently, because we're still in a bull market. I if in a bull market, I generally want to be taking things to the upside. But look at XLY. Let's do a flexible grid. Oh no, I don't have one for XOY. XOY is pretty negative. Look at Tesla. Come on, TS. Tesla is the worst stock in XOY. I always look at Amazon too. Let me go to my normal chart. Look at Tesla from the top, from the high. And remember when we were saying, look at where I had previously drew these levels at 300 and I think at 150. Tesla was stuck in that range forever, right? On a prior episode, I drew that range. Tesla was stuck in that range. It finally broke out and now is right back to that damn range, right? Right back to that range. I was potentially going to short it if it got to 300. I like because I had been watching Tesla so long and know that range is from 100 to 300. I know that there's a lot of resistance right there at 300. So um, I'm betting on Tesla to keep dropping. So that's me personally. It's trending negatively. The car sales haven't been great. Elon isn't is getting a lot of haters. Like, let's be real. A lot of people who buy Teslas that have money are liberal, and he's targeting right now poor conservatives, and poor conservatives don't buy Teslas. So yes, there are more of those people, but like they don't buy Teslas. So if they're not buying Teslas, I don't I just look at the old price action of Tesla and then looking at its recent earnings, and I'm seeing like, hey, this is something where it's the opposite. I'm waiting for Tesla to have a huge green day to short it back to the downside because this thing hasn't been looking positive. Look at the trend: lower lows, lower lows, lower highs, lower highs, lower highs, lower highs. So the trend on Tesla is negative, and it is the most negative sector right now, or subsector, XLY. So I want to beat up on the weakest thing out there. I don't want to short strength. I don't want to short gold. I want to beat up on the weak, right? If you're a bully, you beat up on the weakest thing out there because you don't have a challenge. So I want the path of least resistance right now, XLY, and the one of the most heavily weighted names in XLY being Tesla is really negative. So if it has a huge day up sometime next week, that's when I'll think about shorting Tesla back to the downside, especially if it gets to that 300 number, because I know that used to be old resistance. So it's probably going to serve as resistance again. Um, that's all I got for y'all this week. That's my long term strategy, my swing trading strategy for next week. Anything y'all want to look at? Questions, comments, concerns?
What do you think about Google and AMD?
I told you for AMD, my leaps, like I got it on a severe discount at 110. So I'm still in it. I like the fundamentals on it. I went over the fundamentals of its earnings, its growing earnings, right? So
Yes.
for me, I got a year and a half for it to do what I wanted to do. Specifically, a year because I really started looking at it 3 months before expiration, which is why I took the June 2026 leaps on Google at around 110. And so I look at its biggest downturn right here. It went one retracement, two, three, like four. So one retracement, two, three, four, which is why I wanted that 110 price.
Yeah.
And right there, if it gets below 95, maybe I get a little bit scared. But I think this is the number two player in the semiconductor market after Nvidia. And I've looked at their fundamentals. Let's go AMD earnings. Right, they're growing earnings consistently. They're beating expectations. Uh, their net income's down a little bit, but their revenue, their top line is up, which is what I care the most about. Are they growing top line revenue? And right, look at their revenue is 7.66 billion in comparison to Nvidia's that was like 35 billion. So it's not a close number two, but it could totally take a small percentage of Nvidia's market share and keep growing. That's why I bought AMD Leaps, right? So for me, I feel like look at this discount that I bought. It was at a 60% discount. If it keeps dropping, fine. But I didn't buy it at $227,
Hmm.
right?
Yeah.
So for me, I'm okay if it comes down even to like $80 if I'm over the next year and then comes back up and then does another one of these runs. That's what I'm betting on. So essentially, if you were in this washout right here, you like if you bought at 110, which is where I bought, you bought around right here, right?
Yeah.
And then it came down and then did this. So that's what I think about AMD. Fundamentally, I think it's a fundamentally sound stock. It's growing earnings. It has a great CEO. It's in a market that I think is going to keep growing over the next few years. It's number two in the space. It's not number one, but it has some room to take a little bit of Nvidia market share for people who don't want to spend $20,000 to $40,000 on one chip. Um,
Yeah.
and it's still in the gaming space. It's still in the PC space. I think it's the best chip to put in your PC right now is an AMD chip rather than an Intel chip. Intel is potentially not potentially going bankrupt, but it looks like it's going to go bankrupt. So from the PC space, I still think AMD still makes the best CPUs and it's probably going to grow its market share in the computer space too. So that's why I like it. And then also just look at all of the places from the relative strength standpoint where it's come down this low. Look at where it is. It usually tends to bounce when it's there. And look at where we are.
Uh,
So for me, I'm holding. As I bought it because I don't go into leaps without researching the fundamentals.
yeah.
I don't just use price action for leaps because I'm holding it for a year, year and a half, right? So for
Yeah.
me, from a fundamental buy, this is a good fundamental buy for me. So I'm just gonna go with my research. You know,
How many contracts did you do?
I think four total, two in my retirement, two in my wife's retirement.
Gotcha.
Yeah. So that's why, yeah. And I got till June of 2026 to figure out what's going to happen, right? So do I think AMD is going to be a bigger company in a year and a half? I think so. So that's why I bought. Yes, it could come down, but yeah, I'm still here. I didn't buy up here.
Man, oh
Right?
gosh.
Right. And if your goal is to hold or turn these into shares one day, or like don't buy at all time highs. If that's the one rule for me, like more than anything else, try to buy it at least 40% off. And so it's significantly lower. It was like 60% off its all time high. So for me, that's a decent buy. Will it get down to 70%, 75% off? Maybe. But I'm willing to take that little fall. What I'm not willing to take is this fall from here all the way down here.
Exactly. Yeah.
Yeah. Because that's the type of shit where you're just like, I'm never going to invest money ever again.
Huh.
Right? And you got people like that. They're like, no, I bought AMD is a terrible stock. It's like, no, when did you buy it? Nvidia is a terrible stock. And it's like, no, when did you buy it? Microsoft is terrible. It's like, no, Microsoft is one of the best companies in the world. When did you buy it?
Yeah.
That's the
What are your
main.
thoughts on? Are you still in your Google Leap right now?
Yes, but I'm thinking about getting out because it's come down. But this is also something that's discounted that where I think the fundamentals are good. It just has all of this regulatory pressure right now. But I still like Google. Uh, but
Yeah.
and look how exhausted it is. So
I've
this
been
is
looking to get into Google for a while, and I've been waiting for it to drop.
here you go. Here's your opportunity. A
Yeah.
better price would be 150, but does it ever come back down there? I don't know. 40% off would be that 150, but look at, like I tell you, that 200-day moving average seems to be a place where it tends to bounce, and it's underneath that right now. And like I said, it's fundamentally sound. If you look at how much cash it has on hand, and then for me, it's like, how often do you use Google? I know I use Google, what, 10 times a day
Easy.
at least. I got a
Easy.
Google Pixel phone. Like, look at the earnings. Look at all that green. It missed
Yeah.
revenue a little bit, but it's making $96.5 billion a quarter and has amazing margins. And and it's the in the lead right now for quantum computing, which people think is going to be the next AI sector. So I'm like, yeah, this is something I want to hold on to. This is something I potentially want to be invested in. But like this, Google's a good company. From a fundamental standpoint, it's a good company, right? Is Google, if you went to the moon and came back in 5 years, do you think Google's still going to be around? Absolutely.
Be my expectation.
Yeah, right. Over some of these other companies, but Google's at a yeah. Let's look at. I always look at a weekly chart if I'm buying long term, because the weekly levels are usually a little bit stronger. That 160 mark for Google looks really good. Because look at all this support and resistance right here at 160. Looks
Yeah.
160 looks really good for Google. Will Google get down to that 150? I don't know. 150 would be even better. That would be my 40% mark, but tech's going to have an even bigger correction But I'm just looking at the RSI here. Yeah, maybe it could go a little lower. But 160 looks good. 150 looks even better.
Yeah,
But once again, 5 years out, this is a 5 year chart. And this is the biggest dip on a 5 year. Ideally, in 5 years, this is where you bought was on a dip. If you bought Google at $50 and it's at 170 now, you 3.5x your money.
yeah.
Right. And I just don't see. I think YouTube is gonna get bigger because your kids, my kids, watch a ton of YouTube, right?
Yeah.
All day. That's my favorite. My daughter's favorite thing to watch. Netflix and even Netflix now too, and YouTube. But she loves YouTube, like especially if we're out. So I don't foresee YouTube getting. YouTube is the second biggest search engine behind Google, and ChatGPT might be taking Google like some of the market share for Google search, which I don't think is necessarily true. I think people are going to use them in tandem, which is what I do mostly. Like I'll go look at
Start on
chat
Google search.
or no, I might start at ChatGPT and then go verify that with Google that it's telling me the right thing. Right?
Mm-hmm.
And because sometimes ChatGPT and LLMs have hallucinations, so I want to
Yes.
go look at Google to make sure it's correct. So I use ChatGPT more as like a tool to do things rather than to search. But for a quick search, especially where I think the money is if Google makes money because businesses pay them to be at the top of the page for
Ah,
their
yeah.
ads. So most when you're on ChatGPT, or at least me, I'm on ChatGPT to try and do something from a tool standpoint. Like, can you help me code this? Can you help me write this? But when I'm going to look for a new barber, if I'm going to go look for a new suit, if I'm looking for a place to repair my car, I'm going to Google.
Has it advanced to a place to where it can do both though? Because I know people who use it to search for information now too.
No, I know, but I feel like you use Google to like verify that. Like, and
That is true. Because I'm like, nigga, you don't know.
even yeah, and even on the maps, like, and then if I'm searching for a place to repair my car, like, I had to repair my windshield a few months ago, and then and my car, I had a windshield repair. Somebody broke into my car, and I got into an accident. No, I had to repair my car before I turned in my lease, and from an accident I had a while back. And so for both of those, like, I went on Google and I searched car accident repair near me, right?
But
I
but do you think the thing is that's classically, I mean, historically, that's what you're used to doing, going to Google.
yeah.
Does ChatGPT, do you think it has that capability to do it, and we just haven't like moved over to that yet?
I don't think it has the data yet because Google is in your email every day and has been for the last 20-25 years.
But it doesn't pull from Google.
No, it can't. It's not on the same API. And
Oh
if
shit,
right? And so it doesn't have all of the data that you have to tell it, like this chat gpt know to send me the results that are near my workplace. Google knows where I work, um, because of how much data it's search engine. When people are typing in things, it knows so much about you. It owns Android, so other than Apple, it's collecting all of the information from the people who have Androids and knows what they like. It hears me every day because I have speakers in my house.
that's
And so,
crazy.
right, so
But you don't think it's only a matter of time because
I
the more information
I
you
don't
send,
think so. I don't think it supplants it as a search engine. I think ChatGPT has like a separate place as like a tool for me. I don't use it to search. I use it to do things like write me a
no,
business plan.
I know, but that's because we're used to using Google. But what I'm saying is, I know this is because I was hanging out with this girl one weekend, and the question she was asking ChatGPT, I'm like, I wouldn't ask it that. Like, I would use Google for that. But she's already on that stuff to where she's asking it, to search for things. Because I'm like you, I use it as a tool,
Yeah.
refine things, do this, spreadsheet that. Like, I use it like that. But I'm just saying, only reason I'm asking is because I've heard other people use it like a for search engine.
No, I understand that. I just don't think they're going to take Google's market share because I think Google search engine is better because it's been building it over the last 20-25 years. So
Yeah.
I think you're going to find better search results in Google. And Google has its own Gemini, which is, it's funny because it Google activated right now on my phone as I talked about it. So Google has Gemini too, and so it has its own LLM, and now it's giving you LLM results when you search now. So I just don't. I do see them becoming like a secondary player and maybe getting bigger than Bing, but I don't see them supplanting Google's supremacy because of Google's lead and data, right? Google's going to give you the best search results for you because it has all of your personal data. That's my hypothesis, and because it's integrated in all of your devices. It has that deal, and depending on what the judge rules, with Apple to be the main search on iPhones. It has a deal, and then guess what? Apple and Microsoft are competitors more so than Google and Apple. So I don't think Apple wants to work as much with Microsoft as they want to work with Google.
But you mean to tell me ChatGPT can't siphon any information from Google at all?
Not legally, because like it's blocked off. Like Google has an API, but it's not going to give it all of its algorithm because that's where all the money is. That's its
Mm.
best asset is its algorithm. And its algorithm has been trained over the last 20-25 years with all the data that we've been inputting from Google Maps, Android, Waze, Gmail, Google Docs, Google. All of these things are for it to collect information on us so that it can feed us better ads. And then they have the second best search platform is video. Does ChatGPT do video search? That's a question. Does ChatGPT do video search?
I
Does
don't know.
does it host video yet? Because now part of me, when I'm searching for a solution to something, I want to search for the video on it. And ChatGPT doesn't have a video platform, at least not yet. And people aren't YouTubers. There aren't ChatGPTers that are like making a living off uploading information and educational resources to YouTube.
Well, if there's a way to have a platform that do both, be as dependable as Google, and also do what ChatGPT does, it's going to be a problem.
Well, but
I
that
don't.
that that is Google though. Google has Gemini, which
What
does
is
what
Gemini?
Chat.
Is Gemini like ChatGPT?
It's exactly like ChatGPT.
Oh, damn. Oh, okay.
So it has its own competitor, but it's just ChatGPT was the first to get to market to commercialize it, so it's in the lead right now. But just
Yeah.
because you're in the lead doesn't mean you're going to stay in the lead. Just like we know MySpace was in the lead in Friendster, and then Facebook came and did it way better. So I just think Google has an advantage because we don't think about how many times do you use Google Docs or Google Sheets.
All the time.
See what I mean?
Every day. Every day.
And so every single piece of information you punch into there, Google is collecting in its algorithm to know, hey, this guy just did a spreadsheet on shoes. We should send him shoe ads.
Not only that, you're on it all the time. If they have a search something like ChatGPT already connected or easily accessible from your
Yeah,
email, your GChat, anything you're already in,
yeah,
you're like, you might as well stay here.
and actual devices. Like I have a Google
And
speak.
devices.
I have a Google router. I'm in my bedroom right now. I have a Google. I'm looking at a Google router, a Google device to one of the speakers, and a Google Pixel right now.
Well, let me know when I need to buy some more Google.
Well, I'm telling you right now, this is the price. Like the price is 160, 150 would be a good price to enter, but Google tends to pop up too. So I don't know. Unless we're in this more prolonged downturn right now, I really like 160, 150 for Google, or I think that would be a decent price where 5 years later you would be pleasantly surprised. But that's my 2 cents. I just think Google has too much of an entrenched lead, and the only thing that can stop it is the government.
I don't know what's going on there.
Yeah,
So,
that's the biggest hit on Google right now is that it has a monopoly lawsuit, and right, that's what we want to invest in is monopolies. Like so they're saying they don't have a monopoly, but like, look, they have the entire search market, and the difference between their search And like Facebook's ad platform is that this is high intent. When you go to Google, you're looking for something right now. Facebook has to, their ads are, you have to stop somebody from scrolling aimlessly for entertainment purposes to get them to be interested in your product versus they go to Google when they need something right now. So it's high intent. That's why people pay more for Google ads than they do for Facebook ads.
What's this?
Feel me? All right, that's it. But yeah, that's just my 2 cents. And I said I could be wrong, but I'm just saying that's why I think I don't. I think ChatGPT is going to be its own thing. I don't think it's going to supplant Google in search. I think it's going to be its own thing. And then I saw this article the other day, and ChatGPT adoption is still relatively low. We're just educated and we use it all the time, but the average person, like go to Thanksgiving and ask people if they know what ChatGPT is, and I guarantee you, like there's only going to be 2 or 3 out of 10 who have
It's
act.
crazy. Y'all still putting people on it. And I'm like,
Feel
wait, you
feel
haven't
me?
been on it?
That's what I'm saying. And not just ChatGPT. There's a million. There's Claude. There's Perplexity. There's Gemini. There's Midjourney. There's a ton of them out there that do different things differently or well. And so, but yeah, I remember my last family gathering. It was only like 1 in 10 that actually knew about ChatGPT or even knew what an LLM was. So I was like, oh, this is still like low adoption. And they said the article that I was reading that the adoption has been higher in the U.S. versus elsewhere. So yeah, I still think Google's still in the search lead and has figured out how to monetize search better than I think. Because like, how is ChatGPT going to monetize search? That's going to be so. Are they going to give you the best results, or are they just going to give you the result where someone paid to be there? Google has figured out with its platform how to do both to give you the sponsored ads at the top, but right below that are the actual best answers to whatever you're searching for. You know. But yeah, that's it. Any other things? We gotta leave. I know they gonna want me to go out to eat soon. So
That's all good, man.
yeah.
Thank you.
All right. Till next Sunday. Mokama's Sunday service. Making it rain without the umbrellas. 8 a.m. every Sunday. But yeah, we just talk about the stock market, and mostly for me, like what I got a couple hundred grand in the market, in and out of the market. So what I'm doing with my money and why, you know. And once again, I could be wrong. I am not Warren Buffett, but I just trying to show my work, you know, with the math teachers always said this is why I'm coming at the conclusions that I'm coming to. And it's mostly due to fundamentals and price action on the stocks. All right, y'all.
All right, man. Thank you very much.
Yes, sir. All right, peace.